Good morning, everyone. It's 8:02 a.m. Chicago time, 9:02 Eastern on Wednesday, the first day of February 2017. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm back to my full-on headset today. I won't be blowing out your speakers like I did yesterday. I apologize for that. I heard the recording and it was just really loud. As far as news today, the biggest item, of course, that's on deck is the FOMC meeting today. The expectation is that they'll keep policy on hold. Um, there's a 14.5% chance that the Federal Reserve hikes its key rate to 25 basis points again. The decision will hit the wires at 2 p.m. Eastern today. China's manufacturing sector continues to grow. Uh, the January number came in at 51.3, which is comfortably above the 50.0, which is considered the expansion contraction line. New export orders climbed to 50.3, hitting their best level in more than a year. Other than that, Apple reported yesterday, came in at $3.36 a share, 78.4 billion. They're sitting on some 289, I think, $289 billion in cash, the most in history of any corporation. It's insane. Um, and then other than that, what we're looking for today, I don't see anything that came out here recently. Mortgage applications, don't really care about that. But for today, what we have coming is U.S. manufacturing PMI final for January 55.1, and then that's at 9:45. 10 o'clock, we get ISM manufacturing 55.0, and then also construction spending at the same time, December, month on month for December, 0.2%. We get crude oil inventories at 10:30. Crude oil inventories show an estimate of 3 million barrels um, surplus. We show a deficit of 500,000 barrels of distillates and a surplus of 1.45 million barrels of gasoline. And then we get the rate decision at 2. And of course, we have our press conference with Yellen after that. Today, what's already occurred, there's a 2-day debate going on in the UK about uh, Brexit. This is day 2. Um, this is regarding the notification of withdrawal from the Eurozone. And then that's pretty much it for the news. Let's look at what we expected yesterday. Yesterday, we were trading against the point of control. We were trading against the point of control yesterday, and um, Um, we have dropped, we're looking for a drop, a failure to continue, and then a rotation higher to the upper end of the range. That's the primary hypothesis. This is what I would call responsive buying back towards where we were over the last few days. The secondary hypothesis is um, for an attempt higher and then a push down. Um, and then a push down into the 2265 area, and then for the market to balance and end up in the 2270 2271 area. As far as the third hypothesis, which ended up being the one that worked, so this hypothesis number 3 was the one that actually took place. It almost came out exactly. um, is the expectation that we would likely drive down and then make a low and then make a failed low after that, and then start rotating back up towards the 2265 MC point of control, which is the most traded price in this zone since early December. Very, very big price there. We keep going back and again and again and again to it. So Here's that's the expectation. Actually, checking the calendar, it looks like Yellen is not doing a press conference today. I apologize for that. Anyway, so those are the three hypotheses. This is what actually took place. You can see here that we were sideways, then we had that push down as expected, which put us in hypo one. So up to this point, we're good for hypo one up to here. And then we see it breach the low of the prior day, and the expectation is for it to go into a corrective mood, a corrective move here, and then for it to start moving up just like you see in this chart here, just like you see right down here, right? Same thing occurred right there. There's the test down, there's the higher low, and I'll show you what that looked like in the order flow in a minute. I'm trying to include order flow in potentially regularly in Wednesday's broadcast because I think order flow is misunderstood and it's just an important part of finding entries that are um, that help your edge in placing your order. So that's what we got yesterday. So hypo three was the way to play this. Just as we're doing our review, I want to go over this real quick. Now remember, there are there's the there are two key opportunities here. There's one here, so we get the rotation down, we get the pullback to confluence. This is confluence here. You have VWAP, you have the mid, you have the opening swing low, the dashed teal line, you have the dotted green line, which is the open. Lots and lots of confluence here. What does that look? So if we're initiating a trade there, what would that look like, right? So here's what it would look like. Let's scroll back to that time period. I notated the chart. So this is the move down. So this this here is the same as this rotation here. Okay. And then what we have is the market then turning up. So it's starting, you could see here that the bids started to move in, started to increase as we move lower. So we're starting to get into an area where we're going to get into collisions with the bid, and it's likely support a support area. We have a collision right there, which is likely to slow the selling down. It doesn't mean it'll stop it. It'll likely slow it down. The market pushes through. You can see that this bidder here canceled all of these orders, leaving us blank underneath. But then the market starts to get into a corrective move. There's the classic corrective. Okay, back to our mid. So this is the area that I highlighted in the other chart. This is this area here, right there. Okay, so that's this area, the pop to 69.50. And then there's the pop to 69.50 right here. So you see it. And then, so we cannot initiate, I don't initiate on that initial pop because I have nothing to lean against in this first test. There isn't anything here in the order flow that says, look, this is likely to pause here. What am I looking for in order to initiate? Notice this offer. The whiter the offer, the lighter the color, the bigger the number. So as more and more offers come in, this goes from dark gray, black, dark gray to lighter and lighter and lighter and becomes whiter and whiter and whiter the bigger it gets. And what I'm looking for here and what I tried to demonstrate in last Wednesday's video is this movement where the market starts to move up, right? So we have a failed initial, this is an initial mid test, so it pushed through by a little bit, I think about 5 ticks, rotated down, and then we get the second test, which is a higher high, and this is likely to get the price action people to kick in and say, wow, this is a higher high, this is a higher, this is a higher high, this high is higher than this high, this low is higher than this low, the trend is up. But the context says what? The context says you are pushing up, you are pushing up against a key area here. And so I'm looking in the other direction. And what I'm looking for to help me decide that is that as the market moves up, these offers get brighter and brighter, meaning bigger and bigger and bigger, and it creates an opportunity for me to start building a short position. So you can see even down here, as the market starts moving up, it's moving from gray to lighter and lighter and lighter colors. I'm sure you'll see this on several other people's videos now, but this is how I'm looking to initiate. That's the first example. That's a short example off of and mid VWAP, OS low, and opening price confluence. Okay, so there are 4 items there, so that's enough for me to start building a position. This is another example of a collision here. You can see this goes from dark gray to lighter and lighter and lighter, and it gets even more light as price shifts up, and you have a lot of big dots in here. I can zoom in and show you the size that's being traded here. A lot of big dots. That's a collision, and it creates this at least temporary rotation. So we went from 67 down to 65, 75 or so before the market started to continue. So you have an opportunity at least to lay off some risk. But the trade that I wanted to show you is further down the line. There it is. Oh, this is another short setup. So this particular trade, is again so we go and make a lower low. So now the mid, which is this blue line, gets refreshed. So it has dipped. Okay, so it has dipped down. So this sets us up for another mid trade, and essentially it is the same as this trade, except the mid is a little bit lower. And I'm looking now for the 67 quarter to 68 area for a small rotation. Remember, I'm looking for 2 to 3 points on every trade, multiple times a day. Okay, and so that's the setup we're looking for. This is later in the day right here, and I'm looking for this failure. I'm not able to take it on the first go because I don't have much to lean on. But you can see that the initial test here had some size above it, but the size didn't start building until we started moving away. And then what happens is as the market starts pushing back, it has its 4-point rotation from 68.50 to 64.50. But as the market starts to push up, you see this offer start coming in. Remember, I'm not trading any area that has an offer coming in as the market's moving towards it. I'm not doing that. I'll do that for scalping, but I'm not going to do that in this example here. I'm looking for context, and the context is to sell short into mid, OS low, and just above VWAP. And I'm looking for another short rotation. I'm looking for 2 to 3 points on this trade. The first trade did not give me any backup up here. It could have just continued rising, but this trade here clearly got some offers going, and then you have a collision here, and it creates an opportunity to start building a position somewhere ahead of that, and then look for the rotation down. The worst case scenario is it blows through, and then I have some liquidity above to help me get out. So that's my backup, approximately a point and a half above or so, risking a point and a half or about 4 points in rotation. So you can see how this trade worked out here before we start to move towards the close. And then once we get into the close, again, it's important to see this. And this is where Bookmap is really key to my trading. Remember, I execute trades right on this platform. You could see that the market, the offers that have been there all day, and you can see how far back they've been sitting there. As the market moves up, these offers do not move, and it creates this massive collision zone, which slows the market down temporarily before it just continues to go higher. So it is hard for the market generally to blow through a collision zone and have this quick spike up. There's generally an opportunity to get out, and there's your opportunity there in that zipper. And then, of course, later in the day, around 4:30, 2:30 Central, all times are Central here. I'm in Chicago. 3:30 Eastern, you get the end of day packing of the book, and you start to see solid white, right? That's what the solid white is that everybody now starts working their exits for this session. and you get into a wall of offers, see right here, and then you get these massive trades that take place. Look at these just gigantic collisions. These happen almost every day right at the close. This is the final margin play ARB on the close, and you can see the size there playing out. So this is where we stand. This is what I was looking to explain. I'm just showing you this in an example of a recent setup off the charts. I know this is getting long-winded here. I've spent about 10 minutes on it, but I think it's really important to put the whole thing together, right? We do the trader bite, we look for the hypos, we look for context. Um, we look for context and we look for areas to trade against, and then we support those areas with order flow and put the whole package together. So I'm not giving you tidbits and then you just go off and do whatever you want. I'm looking to help you hopefully put something together that is yours, that is unique to you, that you can trade off of. Let's quickly review the overnight and do the hypos and move on with our day. So the overnight session just could not find any sellers. The market's still gravitating all the way up and it continues higher. We're trading above yesterday's range. The overnight session has been fairly quiet, but you could see right at the Asian Open, we started to push higher and we're holding high. So this is basically like a cup and handle or saucer formation or whatever. And it's got its pivot around 81.50 and it's looking to continue to want to attack higher. We're starting to push up against our gap zone above, so we are right in the center of the gap zone from the 25th of last week. And that's how things are shaping up this morning. The primary hypothesis for today is for the market to open auction out of range. It is in the gap zone. I'm looking for a very weak attempt lower. I'm looking for this gap to remain open today. I'm looking for a weak attempt, so responsive sellers are likely to come in because the inventory is positive and it's likely to balance on the open, but I'm looking for this to start rotating up and to start pushing towards this prior low of 87 or so. That is hypo 1. So hypo 1 is initiative. We're initiating away from the most recent auction. When we're moving away from the most recent auction, it's called initiative. When we are gapping above it and starting to move towards the most recent auction, that's called responsive, and today is expected to be initiative. Again, buyers are in control. As I've been saying, this market is like an air-filled ball or balloon that you're trying to keep underwater. That's a great example that was offered by someone on Twitter named Jeff. Um, and it's just what's expected for today. Now, if we open in an open drive and start pushing towards that 87, I'm looking for failure first. I'm looking for it to start to push towards the mid and then to finish somewhere in between. I'm not looking for sellers on hypo 2 at all. I'm looking for the rotation up to start kicking in. The third hypo is a quick flush up, and then the market starts filling the gap and testing the prior day's range. I'm not looking for it to go far. I'm looking for the overnight low, which is the high volume node that we left behind on the close. I'm looking for that to present some support initially down at 22.74.75 or so. That's your hypo 3. Okay, so my job now is to watch the market on the open, to watch the order flow and look for areas that I can trade against, right? And then I'm looking for it to initiate a trade and to keep an eye on how the bids and offers through those white lines, how the bids and offers are responding to what the market's doing momentarily. Okay, so that's what I've got for you. And I'll leave it at that. Good luck today, and hopefully you've gained something out of this today. If you're interested, by the way, in the software, just because I love it, you can find it at s the number 5 bookmap.com. s the number 5 bookmap.com. Take care.